the QBO Gym, and this is where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do an entire month's worth of these all on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's go ahead and get into today's exercise, which is being pulled from our October Year 1 strength training section where we really focus on sales tax. At the top here is an animated video to give you a synopsis of what is going on in Craig's world this month. He is our fictitious business owner. Further down is an interactive pre-assessment quiz that relates to the video up above. Below that are all of the exercises in this section. And at the bottom here is an optional area where after you have gone through all of the exercises in this section and completed them, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everyone what you have learned so far. So let's dive into today's exercise where we are going to practice invoicing with sales tax. Go ahead and click on that link to have the exercise come up for you. I have it here on the right side of my screen, so let's read through the scenario. Amy's Bird Sanctuary has ordered a rock fountain for their flamingo enclosure. Craig also previously did some custom design work and he has asked you to send her the invoice for everything together. Here's how to do this. You'll also take a deeper dive into sales tax while you're at it. So you will need to be in the same session of the sample company that you did the previous exercises in. If you have not completed those exercises yet, go ahead and click on the link on the top right corner of your screen. That'll take you to the first exercise, complete that one and the one after that, and then come back to this one. They all build on each other, so it's important to start with that first one. I have the sample company here on the left side of my screen. This is the last page that I left off of from the previous exercise. So let's get started with this one. And as another reminder, I mentioned it in the 2 previous exercises, but in this and the following exercises, you will be working with general sales tax principles, and they are for educational purposes only. Your client's sales tax, even if they are in California, like Craig is in the sample company here, will be different. So just keep that in mind as you're working through these. So let's go ahead and create an invoice. We're going to click on the plus new button and then select invoice. So the plus new button is on the top left corner of the screen. Click on that and then under customers, select invoice. And once it comes up, we're going to fill it out. In the customer field, we want to select Amy's Bird Sanctuary since that is who it is for. So click the down arrow and she is the first one here on the list. Click on that. Her information is going to appear as well as this pop-out drawer that you see here. Now you can see that the design work that Craig had previously done for her is part of this. It's this billable time right here. So we actually want to add this to the invoice. And the way to do that is just by clicking on add. So as soon as you do that, the information that was here has now moved over here to the invoice. Now you'll notice that the design work is not marked as taxable. This is not because it is a service type. As you saw in the previous exercise, even services can be set up to be taxed. The reason it is not showing up as taxable here is that inside the details of the product service, it was marked as non-taxable. So that's why you don't see a check mark here under tax. Let's go ahead and add the rock fountain. So on the second line under product service, we're going to select rock fountain. So go ahead and click into it and you can click the down arrow and select it. It is the 4th one on that list. So go ahead and click on it. And you'll notice that this product is taxable. Let's take a deeper dive look at how this is calculated. Scrolling down here to the bottom of the invoice, you can see that QBO calculated a tax rate of $26.13. This tax rate is based on location, which means it's using the automatic calculations programmed into QBO. Alternatively, you could select one of the custom rates you set up previously or add a new one. So if you didn't see what I just did here, it wasn't showing up as anything, but as soon as I clicked out here anywhere, the tax rate came up. Sometimes if you stay in on this particular field, on this line, if you don't click out of it or hit the tab key, it's gonna just kind of sit there until you do those things and then it updates it. So here is that $26.13, the sales tax rate. Now remember, the custom rates are here because the sample company converted them from an old system. In a real life scenario, you wouldn't see them unless the client has similarly upgraded from a different system. A more common use for custom rates is an occupancy or accommodations tax for some types of industry. Note that you cannot set a custom rate per product service item on the invoice. Once you set a custom rate, it applies to everything. So let's go ahead and see some more details about how QBO calculates the tax. We're going to click on See the Math. That is right under here underneath that $26.13. Click on that and you'll get this pop-up here. Now, as mentioned previously, QBO uses three things to calculate sales tax. One, the customer's tax exempt status. Two, the location of the sale and or the location of the customer. The collecting agency determines which of these or both is used. And then three, the type of product or service being sold. As you can see the Math screen shows all three of those things here. The customer section shows whether the customer is tax exempt. You can change it here if necessary, but you'll learn about a better way to do that in the next exercise. This section also shows that the tax rate is the automatic based on location rate. You can change this to a custom rate here if necessary. Changing it here or changing it on the previous screen has the same effect. Go ahead and change to a custom rate just to see what happens. So we're going to click on, go back, we're going to click on edit right here. So go ahead and click on that in the customer section. And then in the default tax rate field, we're going to select California. So click the down arrow, select California, go ahead and click on the green save button. And you'll notice that this setting overrides all other settings. If you are using a custom rate, you can have neither a locality nor product level rate. So return to the default tax rate based on what we had before. So go ahead and click on edit and then click on that down arrow, click on automated based on location, click save. And now you will see all of this information come back here. Next, in the next section, this determines the location and addresses used in calculating the sales tax. Some localities base the tax on where the item was sold, the business address, which is in the accountant settings. Some localities base the tax on where the item was purchased, so the shipping address, if different than the business address, and some include both. Luckily, QBO knows all that, so you don't have to. You can edit this section here to add a shipping address if you did not include one on your invoice. If the jurisdiction requires tax, you can add the agency right here as well. And finally, this third section displays which tax rates are being used based on the products and services selected on the invoice. So here's that rock fountain. So in this case, the rock fountain does not have a special rate. So the standard rate, the same one shown in the section above, is applied here. In the See the Math pop-out, you also have the opportunity to override the automatically calculated sales tax, which would be right here. So let's go ahead and click on this right here just to see what this looks like. Now, there are times when you have a legitimate reason to override the pre-calculated sales tax. For example, maybe your jurisdiction has changed its rate and QBO just hasn't quite caught up. It shouldn't happen often, but it does happen. When you need to override, you can open the drop downs to display tips from QBO to help you decide whether to proceed. Now, if you are sure you need to, then you can enter a specific percentage rate to use or a specific amount to use. You can see right here. Either way, for auditing purposes, you must select a reason for overriding the tax before you confirm. So you would do that right here. So we're going to just close, the current rate is fine. So we're just going to close out of this by clicking on the green close button on the bottom right corner. It's going to ask if you want to leave without saving. Go ahead and say yes. And there we go. So you are finished with Amy's invoice, so you can go ahead and close it. In a real life scenario, of course, you could actually send it to Amy, but since we can't actually send invoices in the sample company, rather than clicking on save and send, we're going to click on the down arrow and then select save and close. So go ahead and click on that. And now that invoice is saved, and that is how you invoice with sales tax. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We're going to continue on, and if you want to join, be sure to leave this session of the sample company open, as you will need it for the next exercise where we investigate sales tax liability. And I will see you in the next video.